Welcome back to Investing with Mackie. In this video, we're going to take a look at options, specifically the delta, to see if we can determine if that's a valid way to decide whether or not you should sell or maybe buy an option based on the delta. I've recently become a big fan of selling options, kind of focused on that theta gain, and I've been choosing deltas somewhere around the 0.2, 0.15, and I'm just kind of curious, is that a valid way to choose an option? So that's kind of what I'm diving into here with this analysis. If this is content that you do like, make sure you like and subscribe. And then I've went ahead and created a Patreon so you can come and support me if you'd like to see more of this content, as well as if you'd like access to the code I'm running and the data so you can do your own analysis. I will share everything to my Patreon supporters. So with that being said, let's go ahead and dive in. The first box here is we've got some includes inside of our Jupyter Notebook code, or some imports, so we can use some various libraries that we'll need for our analysis. Here I'm pulling in our SPY data, so historical data. This is simply a file that I downloaded from Yahoo to get historical open, close, high-low data. So we can run that box there. And just to make sure the data worked, we can see that looks like on that date, the fourth index, we do get a value for that. So then diving into here, here's where I actually start to pull the data. So I'm going to look for specifically my SPY data files inside my options folder. And then I have historical data for morning, shortly after the market opens. And then also about 10 minutes prior to close, I pull data as well for my analysis. So initially in this analysis, we're going to go ahead and look at the afternoon data right before close. And so we'll go ahead and look at those files there. So we can see here, I've got about 600 files worth of data in my options folder for SPY in the afternoon. So that's what we'll use for analysis at this look. All right, just simply outputting the date there, and then this is kind of where the meat and potatoes are. So we're going to go through all the options. I'm going to look at every fifth file. Since we don't need all the data, we're just trying to take a snapshot of it. Open up file by file. We're going to grab the call data. Like I said, we could take a further analysis and look at the put data with their options as well. The way that the data is built is it's got the date of expiration for the option and then the days to expiration. So I'm going to break that up, create some variables for that. And then because when you get to the extreme deltas, some weird things might happen. I'm only going to be looking, so this is my days to expiration. So we're going to look for anything basically less than 90 days, but greater than 1. So that way we're kind of focused on some realistic trade ideas. And then, as I mentioned, come down here, the deltas, here's what we're looking for. So deltas greater than 0.05, we're going to ignore, so it's the less than, and then the 0.95. So kind of focus on that meat of most of your deltas, where you probably intend to trade, where you're not looking for the pennies in front of the steamrollers, by doing really small, and then also so high a delta where you might as well just trade the stock itself. So that being said, we're going to take all that data, pile it in some variables, and then we'll be able to plot that. So I'll run this, and we can see as it's running, here's all the files it's going through and analyzing the data. So we can have our data points. Once that's complete, if you're not familiar with the Jupyter Notebook, we'll get a number in there letting us know the file or that box is complete in its analysis. We can see we've got 94,000 data points. So here, we're simply going to go ahead and plot all those data points. So our first analysis, we're going to see some data here. The bottom is our deltas. And then the left side is essentially we're taking the strike price compared to the close price. So anything over 1 means that the close price was greater than the strike price. So we can see that basically anything greater than 1 is in the money, anything less than 1 is out of the money. So the lower deltas, right, these would be further out of the money for a call, that they tend to be below 1. And then as we move to the right here with our higher deltas, we can see that it starts to shift where there's more and more of the options that are in the money. So in that case, the strike price is less than the close price. Okay. So the idea behind this and why I wanted to take a look at this analysis is to determine, hey, if I choose a really small delta, how likely is it that it actually ends up in the money? So we can see that's where that anything above 0.1 is. So I'm using this graphing library inside Jupyter Notebook. We have the ability to actually kind of scroll around. We can zoom in. So let's say that, hey, I'm focused on deltas less than 0.2. So let's zoom into that section. And we can see, we'll go ahead and grab a little pen. All right. So we can see that it looks like if we do choose really small deltas, right? So 0.1 and less, that most of them do fall below that 1. But these are your black swan events or events that go against your play, where depending on how your position is, you could lose all your money, right? If you're looking for a high likelihood of success, you might put a lot more money into that play. So it does turn out that there is a decent number of options here that actually expire, right? In the money, where if you're selling the option, that means you potentially are losing out. So to take this a step further, I'm kind of interested in maybe it's the days to expiration that actually impacts that, right? So this right here is all of our days to expiration up to less than 90 days, so 89 days to expiration. So obviously the more days you have, the more likelihood that one of those events could happen. So what we went ahead and did in our next analysis is we're going to do the same thing, but we're going to break it down by days. So we can actually see, and here we go, we got this really cool chart, a bunch of different colors, the days to expiration. So in this chart, what we can do is we can select the specific day. If we double click it, it's the only thing that'll show up. And if we double click again, everything will come back up. But based on my previous videos, you can see that I like to trade, or I like to look at where the theta burn is the highest. And so I like to look about 7 to 14 days. So with that, let's go ahead and we'll just take a look at those values there. Okay, so we can see that the shape of the graph is still the same. And like I said, those low deltas is what I tend to look at. So we can zoom in here. And we can still see, yep, if you're looking at the 7 to 14 days, so you're looking for that high theta burn for some, potentially quick earnings, that there are still quite a bunch of these dots that appear above that one line. So in that case, that is a point of concern. If you're putting a bunch of money in there, you're risking it all for those high likelihoods. Now, clearly, the majority of the dots do fall below the 1, but all it takes is 1 above. If you don't adjust your position, roll your position, and you could suffer decent losses on that play. So we can see the analysis there. Now, another thing that's been coming up lately, I feel like, is the 0 days to expiration. So I went ahead and decided to do a poll on that. Now, before we were looking at the end of the day options. So 0 days to expiration, you'd open in the morning and then you'd basically hold it, or close it out at the end of the day. So in that case, I'm going to go ahead and pull my files for the morning, and we'll kind of do the same thing. So it's going through. We can see we're only looking at those 0 days to expiration. And then because I'm focused on that specific data, instead of every 5th day, I'm grabbing every day's worth of data. So for the code here, you can see files. I'm grabbing every file, not just every 5th one. I'm grabbing every day's worth of data. So that's going to take a little bit longer because it is quite a few more files that we're going through. And then real quick, while that is running, something that's interesting when I looked at this data before the video, we can see as we get close to that 0.5 delta, so rescale, right, the 0.5 delta is right about here. We can see here's what this one line is. So right about 0.5, it does appear that it's almost a somewhat even split, right? We do have a decent number of dots above and a decent number of below. In this case, it actually looks like there are more dots below. And this is something that I'm trying to dive into a little bit more and see why that is. I don't know if that's because of the nature of options. I don't know if it may be calls or puts, but we can kind of see, yes, there's that 1.0 line, and right, it's not quite half and half. But as we look at our 0 days to expiration, so come here, that's completed. Okay, we got about 4,000 data points. We can see as well, looks like 0 day to expiration, same kind of thing, right? There are ones that'll expire out and ones that do expire in. If we kind of hone down on that 0.5 delta, we can see here, it almost looks like the majority of the 0.5 deltas do fall below. So like I said, it's something that I'm looking to maybe do some more analysis in to determine if it's that the data set I have closes higher than opening. So most days, or closes down, so the market generally down as opposed to up. Or once again, if that's just the nature of options. And so if you guys have any insight on that, I'd be interested to hear that. So we can kind of dive into that analysis a little bit more. Anyway, if this was any interest to you, feel free to like, subscribe, and if you want access to my code here and data files, the link below, you can follow the Patreon, and you'll be able to download that via Google Drive, and you can kind of run your own analysis. Future videos, I'm planning to take a look at open interest to see how open interest maybe applies to prices, if open interest increases or decreases over time for specific strikes and how that might affect price. Maybe option volume as well. So looking forward to doing a lot more analysis. If there's any things that you are interested in seeing, let me know, and I can kind of run through that analysis as well. And we can hopefully learn together on ways to look at the data, visualize the data to help us make the best options for our trades. Thanks for watching, and hope to see you again soon.